good evening, and thank you for coming to the Financial Services Club this evening. We are a small but select crowd, but I'm sure that's nothing to do with this fascinating topic of the future of trade associations, and more to do with the Women's World Cup tonight, and perhaps the cricket. We have, oh, I forgot my clicker. Right. So, Financial Services Club, founded by Chris Skinner, who still remains chairman of the club, but it's been taken over by Michael Manelli, who's co-chairman, and is running it now with Zedjan, which has allowed it to offer many more resources, because you now also get the benefit of long finance and the other events that Zedjan has been promoting for many years. So, for those of you who don't know, the club was established in 2004, so this is our 15th year, yay! And it's a networking club which promotes financial services and global financial innovation. So it does various wonderful things, most interestingly, of course, these seminar events in the evenings, which we're at right now, but also 4 keynote dinners a year, which are great events, always in one of the guild halls of the city. Roundtables, and also is able to assist if you have needs for primary research, white papers, or quantitative and qualitative research. And that's really where the partnership with Zedjan excels, because Zedjan has been producing things like the Global Financial Centers Index, the Green Finance Index, and other indexes for many years to a very, very high standard. And I really credit the Global Financial Centers Index with, to a great extent, underpinning globalization of financial markets, and particularly to emerging markets, because they now know what it takes to run a proper first-class financial center. So there's a daily newsletter from Chris Skinner that comes through the Financer blog. That's always great fun. That's my first read of the morning. It has been for 15 years. There's all kinds of social media, Twitter, whatnot, and we can also provide, of course, strategic planning and business development, should you have those needs. There we go. That's Chris Skinner's blog, The Financer, and that is, of course, the Financial Services Club website on the right. These are some of the white papers on offer from Zedjan's Long Finance Initiative. And there's a whole library worth exploring to see if there's something that interests you. It really is a very rich database that spans the breadth of recent developments in financial markets and the scope of instruments, new market infrastructures, cybersecurity, distributed ledger technologies. It's really worth having a rootle around in there just to read the titles. And read the reports. Some of them are fun. I've even written one. Or edited one. I edited. So, this evening, of course, we have the future of financial trade associations. This is fun for me because I get to meet with 2 old friends. John and I met at the Securities and Investments Board after I first immigrated to the United Kingdom. I didn't know I was immigrating at the time. I intended to come here for 2 or 3 years, but you know, there's nothing more permanent than a temporary arrangement. And anybody that stays in London more than 5 years becomes a Londoner, right? So I was brought over to dematerialize the London Stock Exchange back when there was an account settlement cycle that took 2 or 3 weeks and involved lots of little old ladies sorting paper certificates into laundry baskets. We did that, tick, right?
Tourist.
And yes, Taurus didn't work, admittedly, but Crest did, and things have been pretty smooth since then. So John is now with he's Deputy Director of the Personal Investment Management and Financial Advisors, PIMFA. Before that, he was with the CFA Institute for Financial Markets Integrity.
Yeah, there's some
Center for Financial Markets Integrity.
Yeah,
there we go. there was a comma in there that I was missing. And then before that, he was, for many years, at the FCA, and before that, the SIB, in supervision of international markets. So he knows more or less the whole history of development of international markets, and is now more or less on the retail side. Paul, I've known almost as long, because he was at the stock exchange when we were doing tours. And then he went to become the chief executive at Apex, director general at the Association of Individual Financial Advisors, and then the Council of Mortgage Lenders. And he is now with the Peer-to-Peer Finance Association, which is sort of the whizzy cutting edge of lending, because it's the online direct investors to borrowers facilitation. So that's actually quite an interesting evolution in the financial markets. I should click earlier. So, go back, because neither one of them, bless them, has brought slides. So there is no PowerPoint tonight except for these, which is going to be something I think is just admirable. I know Paul has an aversion to PowerPoint. It's good to have people that are able to think on their feet and speak their views without a recourse to screens. So I will turn it over to them now that I've done my bit with the screens. Some reminders: everything's under Chatham House rule, so that you can say what was said, but not who said it. Our sponsors are BT and Invest Northern Ireland, to whom we are perennially grateful for their support of the Financial Services Club. Encourage anyone here who wants to become a sponsor as well, so we can thank you. And phones to silent, please. And, I do want to mention a couple of upcoming events. We've got some really good things coming up. One that's a little odd for the club, but fits nicely with Long Finance, is next week on the 17th of June. There is a presentation on well, it's actually a book launch on Gresham's Law, on sort of Elizabethan financial markets in London, on the history of is it Sir Thomas Gresham? Yes, I got that one right. Excellent. I do have an M.A. in medieval history, so it would have been embarrassing if I didn't. Then we'll have the Financial Services Club June keynote dinner, which is going to be the launch of a new index, the Smart Centers Index, which focuses on the competition, which turned into a very swift global competition, to adapt existing legislative and regulatory structures to support a shift towards emerging technologies like DLT and AI. Following that, we've got on the 10th of July, the Past and Future Pensions with Leslie Titcomb, who, gosh, this is beginning to sound like I do this a lot, also worked with me at the Securities Investments Board, but then was for many years past the head of the pensions regulator. So with that, I'm going to turn it over to John. Are you up first, John?
I am up first.
Excellent.
Can we do it from here, or do you want to stand up there?
Well, we are a small and select
All
group.
right, if you can hear me from
Whatever
here, I'm
you're
going to sit down.
comfortable
That's fine.
It's kind of easier.
Are we thinking more?
Yeah, that's fine.
Is that all right?
Pull the mic on a bit closer.
Because
It's on. You can
Like that? Is that working? How does it work?
Go check that.
How close when needed? It's a bit long. All right, hopefully that'll make it a bit better. If you need to, yes, here we are, I suppose. All right, well, good evening everybody, welcome, thank you for coming. And thank you, Catherine, for that introduction, and thank you for inviting me to speak. When I looked at this subject, I wondered why we were going to talk about it at all, in a way. Because what is of interest in it, how does it matter, and that kind of thing. And I looked at the programme, and I saw that actually some of the questions have been answered by what Catherine has written here as the leading up to the things we're going to say, things like evolution and new roles and proactive work and this kind of thing. And I think that gives you a little bit of an idea of the kind of movement of these organisations and how they've changed, and also how then they might change in the future. Partly by a process of extrapolation, partly by simply looking at the way the industries, or the bits of the industry that each one represents, are developing. So what I would do would be to have a quick look at the organisation I work for and what's happened to it, and how my own work has actually altered during that time, and then try and get some lessons for that in terms of some headline points which we can then discuss. So when I joined this body, which is really focusing on the retail investment sector, it was called APKIMS, the Association of Private Client Investment Managers and Stockbrokers. It had been run by that time for 9 years by Angela Knight, who of course was a minister in the John Major government. And when she moved across, because she lost her seat in Sheffield, the election in 1992, she took with her some of her cabinet from Treasury and then ran the place just like she was a minister with a cabinet. When I went there, from the kind of background that Kathleen has said, I found it just like a minister's private office, and what isn't apparent from my CV here is I was in government for quite a long time before I entered regulation. So I was very accustomed to minister's private offices. So this is quite interesting. It was an organisation that was very small, it was clubby, it was organised around the idea of people who hadn't quite made it when the Big Bang thing occurred, so that they didn't get picked up by big American investment banks. They left on the side, they pulled together and do something a bit more than just hang about independently. So it became a kind of gentleman's club, and then it was, Angela gave it some bite, she gave it some focus, and she put it on the map a little bit. And when I joined, it was a bit like that. And I came in, and in fact, there was a big European job to do. They didn't really have any European work going. So I invented the job and wrote to the chief exec and said, look, you need, who really followed Angela, kind of really then, you need to do this, and you've got people leaving, so you're getting gaps, and you need to consolidate. So this sort of worked. But the real point about all this was that it was actually inventing the role for the organisation, because they hadn't done any of this before, and they didn't really know that they had to, because the businesses, of course, weren't actually themselves looking into the future in that same sort of way. They didn't see that, for instance, the regulation they got confronted with when it was coming down the pipe to the FSA, as it then was, level, and then hitting them, was actually invented 3 years earlier in legislative processes in Brussels that they weren't influencing. So we were able to kind of build, sort of back up the line a little bit, to begin to represent the interests of members in a way that hadn't happened before. And I think that was a very important kind of point, because at that stage it happened in quite a lot of associations. There were some well-known ones. I mean, one of the best-known ones there was BBA, but there was LIBA, London Investment Bankers Association, which had a very strong intellectual tradition and was very good. But there were few and far between, and they represented many of the wholesale markets. So this was a kind of a new development. And then we went through, we had all the big crisis years, we had the raft of legislation coming in Europe between 2009 and 2014, which were the Barnier years. Barnier then, of course, was the Internal Market Commissioner, and ran all that, and the job that I did expanded, and the role of the organisation expanded, and we became the Wealth Management Association. And the reason it expanded was because there was more and more influence on the way the firms are going to have to behave, because there was more and more detailed regulation coming through. So the Trade Association had an increasing role to try and represent with a single voice, the collective view of quite a disparate group of firms. That's about 100. And I think that, again, was a benchmark for the period, because had that episode of huge numbers of it. In fact, there was the chairman of the Econ at the time, the committee in the Parliament, said that they had passed 63 pieces of legislation in the period 2009-2014, and that beat by one the 62 pieces of legislation they passed in the Financial Action Plan period of 1999-2004 with great pride. And of course, the industry was horrified at this, thinking how many pages they had to read in terms of what was then translated to rules and so on. So, you know, this was a very active period. But I think that without the work that was developed in the association, the firms have lost out substantially, because my estimate is that we saved them tens of millions of pounds by the work we did. And I've often said to my members that had they given me just a basis pointed to, well, I saved them, I'd be retired long ago by now. But and I wouldn't be living, you know, where I do, a better house. So you know, this didn't unfortunately happen, and they continued paying me a salary, which I continued to draw. But that was a very significant sort of point. And then 3 things happened. First of all, the legislative programs began to fall away in European terms, and that was meaning the amount of regulation coming through in the UK. A lot of change. It was much less, but it all the kind of things it was doing. Second thing is that we had Brexit, we had the referendum in 2016, and that began to alter the way in which all things were, and it affected everything, like the octopus dance all over the place. And then the third thing we had in our own specific area was a merger. Now that was interesting because again, in terms of the future of trade associations, one of the things that people point to a lot is consolidation. And I will come to consolidation in a moment, but this was a merger between us and APFA, the Association of Personal Finance, Private Finance Advisors. So it was the IFA group, and they joined us. So we had then all the wealth managers and the advisors, and we began to get a base that was effectively the consumer investment base in the UK. And that then really rather altered the kind of processes for us because we began to get more corporate. I think that again is an issue because again the consolidation process is driven by the idea of costs, it's driven by the idea of rationalization, but it's driven also by the idea that you can have more clout if you're bigger. And that, I think, works to an extent. What we found in the merger results is that, of course, you can have more clout for some parts of your membership and not necessarily others, because that means the fit has to be perfect, and it isn't always perfect when you get a merger. You then find yourself having to work to get the clout for the bits that have come in. So there's a sort of limit to the size you want to be. Again, that will be something which we'll perhaps discuss. But the effect of this was to, as I say, it gave us a sort of a breadth, and that gave us more weight in the market. And we began then to look at what is the unique selling point of the area that we're in, and why is it that firms would look to us to pay fees to represent them, and what is the value proposition we put to them. And I think that that was kind of a sort of a rational sort of moment, and we now produce material dealing with strategy and so on, which we didn't do before, at least not when I was there. I didn't think we did it around Angela Knight either. So what we got, the scale, we got more representation, more firms, we represent a wider range of consumer. We've got a clear kind of area of business. We do advice to private people, we do exo broking and broking services generally, but to the retail sector, with all that entails in terms of what you're allowed to do. And we do discretionary management. This is not, so it's fund management, as you will know, this is managing portfolios for private people. And we invest in funds, we don't necessarily manage them. We have very few fund managers, specifically fund managers in our membership. We have some, but it's a much smaller number. So what does this mean in terms of how you define the area? What is a UPS in this area, unique selling USP, right, the unique selling point? Well, we looked at this, and there are certain numbers of ways of looking at it. But the real issue, I think, that defined this out was that we don't have banks in our membership. So you get then what is the regulatory aspect of this? Well, one of the key regulatory aspects is the client asset segregation rules. They are much more important to our firms than anything to do with deposits, and credit, and lending. We say they don't do that. They're not allowed to do that. They can't anyway, because of course the law governing CAS means that the portfolios they manage are the property of the client or the beneficiary, and the firms can really invest in them, they can't ever own them or do anything else other than the law, what the law says with them. So there's a very tight definition, and of course if there's a bankruptcy of any sort, then those funds need to be managed by somebody else. The firm cannot take them, or the administrator cannot take them, except under special circumstances, which actually come up recently, when they do, but it's because of a loophole of the law, which we like to have closed. So that was one unique sort of point. Then you get things like retail distribution review. Well, that affects the kind of firms that we do, but not lots of others. So again, that was a sort of unique area. Then you get bits of MiFID II. MiFID II, particularly the investor protection chapter, chapter 2, is very relevant to our sector. If our sector is the most hit by it of any of the sectors, because a lot of it is deliberately designed to apply to the kind of firms we represent. So again, you've got a unique regulatory kind of area that is our own. Then you have other bits of legislation that hit us especially, like PRIPS, for instance. Well, this is all to do with kids and comparability and the rest of it. But the thing about that is they're made up by the fund managers, but all the distribution is done by our firms. So how do they have to actually deal with what that legislation tells them? How do they deal with the cost and charges issues? How do they deal with kids that are they're drafted in certain ways according to the law, but actually the explanation as to what these things mean, which of course is pretty comprehensive these days, is actually made by the firms I represent. So they are engaged in dealing in business, which is covered by unique sectors of regulation. You can begin to define out this area. So you get not only the unique selling point of the firms, which are the specific areas of business they do, but the way the regulation then works. And the community becomes self-defining in that way. And the trade association represents that community. And as long as you've got a community of firms, a community of interest, and a community of regulated areas like that, you're going to want a special organisation. And I would forecast that kind of thing is going to go forward into the future. I don't see that changing very much. The nature of it will, of course, alter depending on how the industry works and how regulation works. If, for example, Brexit brings substantial changes to the way UK regulation works, which I doubt, but it may well be redefined to target better the market structures we've got, that might then lead to a realignment of some of the firms in the associations that they belong to. And that might then change some of the designations that we have. But the idea of having that community of interest, which is then represented by a single body, I don't think that's going to change very much at all. And so we could go on about the specific areas and so on which were relevant to the sector I'm in, but I think that applies more generally across the board, that idea. And then you got into things like, I mentioned the value proposition already. What is the value proposition of the organisation? And what are the functions that it then does for the firms? And how does that relate to evolution and so on, out of the clubby interests that we had at the beginning when I was there into what is now much more a larger, owing to the merger, we've got now more staff, a more corporate kind of organisation altogether. Well, there are various things here. One of the first things I want to say about it is that the clear information we get from politicians and regulators, and we speak to a lot of them, is that they like very much the unique voice. They have problems with large numbers of firms, all of whom are suspect, particularly politicians, because each one they think represents its own specific interests, and therefore doesn't really have an objective view. But I think that if the association gets together and they get the views of a large number of firms, then that sort of collective has to iron out the best of the specific interests, and you're going to get a view for the sector as a whole, and that's going to be more effective in terms of getting what you want than it would be as a single firm. So that's one thing. So the collective or unique voice is very important to those you're trying to influence, and so you want to gather together to produce that voice, otherwise you're not going to have the influence you want. I think that's an important thing. The other thing about that, is the kind of associated aspect of that, is the collective weight. And once you've got several firms together, again, politicians will listen much more to you, and actually government will. I mean, so we all relate to Treasury and so on, and other government departments. It's pretty clear that the civil servants, who are pretty overloaded sometimes, would like to have that sort of sorted for them before it gets there. So you don't they might want to get a few different views, but they will also want the collective weight of a single view. And then we mentioned the USB, the defined area that you've got. I've already mentioned that. But the point that that gives rise to is that you then collect, of course, you become a distribution agent. So the way in which we get used, if you like, or employed, perhaps is a better word for it, by the regulator is to make sure that they get information out through us to all the member firms, because they know that our databases are probably much more up to date than theirs. They will have certainly a number of, they'll include all the regulated firms and that kind of thing, but we have access to all individuals who are going to be the ones who receive the information and going to act on it. So the kind of sense of using our facilities to get information distributed and also to feed information back up the line is very significant to them. A lot of our discussions with the regulator and indeed government departments is connected with that kind of process. The other thing we do is cooperation, of course. That means we work with others to get even more collective views. There are a number of City of London entities now that do that, notably the International Regulatory Strategy Group, the RSG team, and City UK. They've been trying to put together groupings that actually affect us, and we get into there, which is quite helpful. And there are others too. There's the information resource, research functions, and events and so on that we do. But the thing also that we do, which I found very important for the firms, is promotion and branding. In an era when trust in financial services is at a very low point and has never really got up from the time of the crisis, one of the functions of an association, as it's quite clear to me, is that it actually can help increase trust in the processes that individuals will have to go through to get firms to work for them and help them to understand that these firms, as they are members of ours, are kind of more likely bona fides and useful. Now, it may well be the firms themselves are very good anyway, but it's that trust issue that you could help actually as an intermediary. We are intermediary between the client and the firm to help to encourage. So these are all aspects of the work that I see that we do, and all aspects of the reasons why we are there, why firms will pay us for an annual fee to do the work for them. The other point about that, I'd just like to say, is that we have a large number of small firms in our organisation, and for them, the cost of the sort of compliance work we do is astronomical compared with their income, and we can provide an unbelievably low-cost solution for them on an outsourced basis. And that is always going to be there, so certainly at the smaller end of the market, and even actually to an extent in the middle and bigger ends, because the efficiency level with which we can do things, for example, in returning consultation returns or dealing with specific aspects that come under rules and getting them changed, is much greater than the individual firm. So the costings are important, and while they'll pay us a fee, it's a lot less than they'll pay to do the work in-house themselves. We found this recently, actually. We were working on Brexit, and we contracted with a law firm, a senior city law firm, to do some work for our firms. And they had asked for this on the grounds that the law firms would kind of have the resources that we just don't have to get into the detail of some of what's going on in some other jurisdictions, because they're all a bit different in the retail sector. And then they were astonished by the cost, and we said, well, that's the price of a professional law firm. And they said, well, we'd rather pay you. So we pay a bit more, we get more staff, and we would have to have a professional law firm. But I mean, it was quite interesting that they found the comparison of costs to be very advantageously weighted in favour of the trade association they belong to. So, I think summing up, I mean, in the future, I would say that the big issue is, I think, is consolidation and the tendency for that to happen. And I would just say there, I see a dynamic tension between pressures always to merge with another organisation because the firms will want to belong to fewer trade associations and not have the costs. But against that, you've got the unique selling point that I've gone through a little bit, where the specific area of business of a firm gets much better represented by an organisation that is specialising in its business. I mean, we have, for example, firms who are sometimes wondering whether they should join the investment association. It's up to them. But the point about that organisation is that it has very large international fund managers. This is where the Schroders and Fidelities belong to, and BlackRocks. And these are extremely large firms with very large amounts of money to throw about place. And they have the ear of governments in a way that the kind of firms we represent don't. That's why the collecting is so important in our case. Firms that join them, what they found is they don't get listened to. They make a point, it gets brushed on the side because there are bigger points made by bigger firms with more money. So we have pointed out to the firms, you need your specialist area, otherwise you will not get the influence you want over the rules, and over the things you want to have influence over. So I think that tension between consolidating kind of pressures, which are often cost-based, and the need to have your unique ability to make your points clearly in a way that is respected by the people you're talking to, will continue, and that tension will prevent mergers from being so endemic and so great that you land up with just 2 or 3 big associations. That's not going to happen in my view. And I think if it does approach that, you'll always get niche players coming in, and the smaller ones, and they'll grow and so on. So I see it as a fairly dynamic area, but I don't see that the merger issue will actually destroy the idea of the trade association that represents specific areas of business. And then I feel that on the other things, the kind of things I've mentioned, such as being the distribution chain for the regulator to a whole set of people out in the industry there, negotiating and advocating for the industry in the specialist way and acting as a collective voice, all these things will continue. And then the promotion, branding, the representation work we do, and the unique research will be there. So for me, I think that financial services trade associations in the future will evolve according to industry shape, but the kind of design or the kind of way that the structure of that sector is framed will not change very much. The kind of forces that make it like it is now will continue to operate, and it's what underlies those forces, what the shape of the industry is, that will determine in what way and shape it is, but those forces will operate in the way they're described. And you will tend to get these tensions going, which mean the desirability of specific associations will always be balanced against the costs to firms of having too many.
Good evening. I first worked for a trade body in 1994. I was the first ever head of life insurance at the Association of British Insurers. My predecessor was Secretary, Life Insurance Council. And I think that this change in title is actually very indicative about how about the evolution of trade bodies around that time. Up to the early 90s, trade bodies have been very member-dominated. Policy had emerged from members working together in committees, going through iterations. There was a secretariat, but its role was to keep the score. They did the minutes, they did the agenda. That's why my predecessor at ABI was Secretary Life Insurance Council. Before there was a meeting of all the life insurance members, he used to write a speech for the chairman, which he expected the chairman to read out, including, if you're too hot, let me know, and we'll have the temperature turned down. That was the text. On it went. And then in the 90s, I think trade bodies started to become more professional. They started to recruit people whose job was not just to act as a secretary for their members, but to contribute to policy formation and to actually drive an industry-wide agenda. That made it a hell of a lot more fun. The previous, I spoke to one of the guys who retired roughly the same time as I came into the industry, and I said to him how he enjoyed working for Trade Body, and he said, well, I learned how to mix a good gin and tonic. I have to say I haven't learned how to mix a good gin and tonic, but I've learned lots of other stuff in my time. Other things that contributed, the rise of independent regulators. I think if you look at the economic landscape in the 80s, the evolving landscape in the 80s, you started with government departments having a very key and major and central role. Gradually their power got dissipated. It got dissipated into independent regulatory bodies. The SID was a very early example of that, and the self-regulating organisations. And various other industry regulators emerged over the course of that time. And there's a difference between them and government departments. They do not have the same authority of a government minister. They have to be more open to consultation. They have to go through a lot more process to demonstrate their accountability and the transparency of their regulatory decisions. For a brief period in the 90s, I worked for a regulator, not a financial services regulator. I worked for the Independent Television Commission, which used to regulate ITV, Channel 4, all those channels. And it was around this time that the government came out with a consultation code about how regulators ought to consult. And I, being a diligent director of public affairs, wrote the ITC consultation code. I showed it to my chief executive, who said, Paul, if I have to keep asking people what to do, I'll never get anything done. And that was a perfectly tenable position in the mid-90s, which has over the last 20 years become totally untenable. Regulators must show they're working out, they must go through process, they must listen. And all of that new layer is something that plays to the strengths of the trade body, because they must also show that they have taken into account all opinions. They can't just go to a couple of favoured participants in the market and get their views. They have to look wider. And that is a trend which I don't think is going to reverse. Of course, there were various things that made trade bodies easier to run around this time. When I joined ABI, we had a team of people whose job was duplicating circulars, placing them in envelopes, and posting them to member firms. And 100 weights of paper were shunted out of the building each day into a post office van and whizzed round to the life offices. And it only took a few days for them to get there. So that was efficient, wasn't it? And the advent of email and the advent of teleconferencing and the advent of all the technology which supports so many businesses has been, I think, particularly crucial in making trade bodies able to operate more effectively and cheaper. It has also, though, undermined another of the core services of the trade body, which was the provision of information. I think there were a lot of places where when I started, I was giving my members information that for them to get hold of would have cost them money and taken them time, which nowadays would be superfluous because the internet is there and could work a lot quicker. than I could. So, what are we left with? So the informational role of the trade body drops. What are we left with? I think we're left with a translation service. Throughout my career, I have been struck at how often businesses fail to understand very clear messages that are being given them by the authorities. Maybe they're just clear to me because I've been in the trade for so long. But I do notice the mismatch of understanding. I was at a good example. There's nobody here from the builders industry, is there? Thank God. Right. I was at a meeting where the builders were being taken to task on leasehold sales by the Secretary of State. I was in a non-speaking role representing the Conveyancers Association, of which I have the honour to be chairman. It's the only time where I kept my mouth shut and hid behind a pillar. But the builders were being criticised, and they failed to get the message, and they were, instead of coming back with what I would have done, which was, we're really sorry, we'll sort it, which was all the Secretary of State wanted to hear, they kept nitpicking around the figures. And I could see the chairman of their trade association getting redder and crosser and more frustrated. And he finally managed to assert to the Secretary of State that it was all going to be wonderful, and if they just gave him time, he'd sort it out for them. But I do think that translation service is important. I do think businesses sometimes don't get it, and I do think a good trade body should provide that. And the translation goes both ways. The explanation to the government officials or regulatory officials about what is going on within an industry is really valuable service. Second, the firewall service. It will surprise you to learn that in my time as Chief Executive of 3 trade bodies, I was never once allowed by my members to go onto the mass media to take credit for something. However, when the bullets started flying and I was on the Today programme at some god-awful hour early in the morning, they were for some reason incredibly keen that they should be represented by their trade body. And I think the firewall service, the way in which trade bodies can actually go out in the media to put a line that doesn't become totally related to an individual institution, will remain very important. The key to all of this is the maintenance of quality and about development of relationships. I think one of the advantages trade bodies have is that they can build up good relationships with individual regulators in a corporate sense, and with a regulator corporately, and which may not be possible for those from individual companies. I think there's some interesting questions about how trade bodies develop now. I have in 2 cases had non-executive directors on my boards, people representing a wider user community rather than just the membership. I think that can work well. The biggest factor I noticed, incidentally, was when we got independence on one board, we reconstituted the board and brought in independence, was that the practitioner members upped their game. They actually stopped trying to score points off each other and tried to look for bigger issues and a more statesmanlike response. I think it will be interesting to see how many trade bodies going forward incorporate non-practitioner members onto them. My personal view is if it is handled carefully, it can be really positive and a good thing. Second, I do believe that trade bodies started in many ways with codes of conduct for regulating business. Stock exchange would be a good example of that. Where I think they're going now is that I think they can have a role in making a market work better, so that they can actually get practitioners to look at ways in which a market can be improved. Example of this, mortgage terms and conditions in mortgage contracts, particularly fees. Which drew attention to the fact that all the definitions were different. And it was very difficult on the internet to compare apples with apples, as opposed to apples with pears. I think I did this on television, I'm not quite sure, I sort of conceded it in the Sky studio. I agreed that we would work with Which to come up with standard mortgage definitions of all fees. I headed off, I I think a Treasury inquiry, which would have been followed by regulatory action. Was that a good thing? Yes. It was cheaper, it was quicker, it actually delivered a perfectly sensible result. And it wasn't as if the mortgage industry was sitting there saying, we don't want standard terms. It was just it never got to the top of the agenda, and it was never going to get to the top of the agenda. So trade bodies can make a market work better in the interests of participants, and not just its members, a wider definition. And I think that is something that trade bodies should be alert to. So what are the opportunities for trade bodies in the future? One, regulatory overstretch. I think the mortgage issue, the mortgage example I've just given, is going to become increasingly visible in other instances, because regulators should take action, could take action, but simply don't have the bandwidth to do it. Look at the portfolio of the Financial Conduct Authority. Are they ever going to get around to doing something that is a simple improvement? Or is their agenda always going to be totally focused on the last crisis, the next crisis, or the big structural regulatory upheaval? Two, I think trade bodies will continue to take the flak. I think they also have a role with newcomers in the industry. When I ran the Council of Mortgage Lenders, I was very proud that a lot of newcomers to the UK mortgage market, almost as soon as they got their authorisation, joined the Council of Mortgage Lenders, because we offered them help, we offered them guidance so that they wouldn't cause themselves problems or cause the market problems. And I think that is a good role that can be pursued. I also think that we mustn't lose sight of some of the old traditions of trade bodies. The networking facility that a trade body can provide, the neutral ground where people can talk to each other in what I suppose I should call a safe space, is actually really important. And I think that is something that trade bodies need to develop. And I think it is a good place, particularly as you will tend to be refereed by somebody who has experience of competition law, so you can stop the networking slipping over the edge into cartel-like behaviour. What are going to be the difficulties? I think trade bodies have got to be slick. I know that there are times when we can be awfully clunky, and our process can seem very elaborate. I think we've got to get out of any over-defensive mindset. I think media, in particular, these days can see through people who are entirely speaking their own book. And I think we also have to cope with the fact that people don't have a lot of time to spend on trade association matters, which reinforces the fact that we're not going back to the days of the old secretariat. We're always going to be doing the days now where trade body executives tend to be driving the agenda within trade associations. Thank you.
Right, both of those were excellent and thought-provoking. I'll kick off questions because I was intrigued by some of that was really quite deep in ways. And I particularly like the point that John made, that one of the things that drove the need to adapt was the way Europe was driving an agenda of a single internal market. And when Britain was, of course, well, we still are a part of Europe, geographically, if not politically, that was driving a role for the association that hadn't been anticipated when it was solely domestically oriented. And as the world globalizes and is driven by harmonization of global regulatory and market standards, I think that role is going to get bigger, isn't it?
Well, yes, I agree. We've already got examples of that. And I mentioned LIBA earlier. That is now called AFME, and it is actually a subsidiary, European subsidiary of the American SIFMA. which is the global organisation to which it now belongs, and that is all to do with the global work of investment banks. So you're getting this in other areas already. But you get it other way too. One of the things that I have done recently is to discuss with Swiss private banks why they come to London, because of course we all assumed they came here because it was a place where they could do European business. You can't do it for Switzerland, as you know, from the EU. So they set up their European subsidiaries here, and then they get to join our organisation because they're actually doing wealth management type of work. They're not just banks, as you know. What we did was to divide off their banking stuff, so that belongs to you. You'll work with UK finance, but we'll take on your wealth management business in the sense that you can relate to us about what you want in that area. So we go and talk to them. And I found out that they didn't really come to London at all to get EU business. They said, we've done Frankfurt, it's terribly easy to down the road from us. We haven't got to catch aeroplanes and get there in half an hour. So they said the real thing we come to London for is the international client base. Because wealth management has, of course, got a huge range of people who go in for it, some of which are HNWIs, some of which are also HNWIs. So they are the ones who are looking for clients for these sorts of people. And the point which is by the banks made, everybody comes through London. It's the world's largest crossroads, everybody comes here at some point. You get a lot of people from all over the world who come in for a few days, they pop by us, and we get business with them, which we just don't pick up in Geneva or in Zurich. So we are here because of that, and if you get into Brexit and get out of the EU, it won't be very helpful to us, but at the same time it's not going to stop that business. So that internationalisation aspect, not from the point of view of the structure of the business, but from the view of the client base, is in a way sort of there, and I think that's just going to get bigger as we go on. There's a world which sort of gets continually smaller. So yeah, I think that's a big issue, Kathleen. That's just one example of how it's going to work.
Yeah, it's something I hadn't really thought about. And okay, I want to bring up something that Paul said. You were saying that one of the roles that's evolved is to make markets work better. And you mentioned data. And to me, this has been one of the big changes, because when I came to London 30 years ago, 29 years ago, I exaggerate, one of the things that frustrated me enormously was a lack of data. That even the stock exchange did not collect trade data. And there was no, I wanted to do market structure analysis on the efficiency of market trading operations because our average trade size, I knew, was going to be much larger than other markets globally. It turned out that it was. An average trade on the London Stock Exchange back then was about, on the domestic market, 260,000. On the international market, about 480,000. And in New York, it was about 24,000. In Paris, it was about 7,000. In Japan, it was only 4,000. This is all in US dollars. But to get the data to actually show that took me about 2 years and an incredible amount of pain, because it really wasn't collected in a way that was usable. Now, one thing that I think has changed enormously is the ability to collect and manipulate data. And I've seen that trade associations have gotten into this. They are now collecting and manipulating data. But of course, that's a two-edged sword, because people will want that data to be used to provide better services to consumers, as you say, but also to make the markets more efficient, and occasionally to beat them with a stick. So, any comments on that?
I think what's really interesting in the data field is how a lot of trade bodies used to collect the data and crunch it themselves. What certainly at CML, where we Council Mortgage Lenders, where we have the gold standard for mortgage data, what we did was enter into commercial contracts with an outside source, which then did a lot of sophisticated tweaking of the data, some of which was a premium service which people had to pay for, but which also provided an extremely high quality data set for commentators on the UK housing market. And people loved it. And having it with a badge from an independent trade body gave it a certain validity, which we had to work hard to preserve. I would not let people spin off our data. Our data had to stand for itself. We did not use it we did not manipulate it to give us the right PR outcome. But we had we managed to do a lot with that data. and because it was impartial, we found that most members wished to contribute to it.
Because originally, well, still the real estate price indices do tend to be provided by the big lenders, individually. There's the nationwide index, and then there's somebody else's index on house prices.
We did not do house price data, and that was a very conscious decision because it was so difficult to get it authoritatively, sufficiently authoritative to meet our standards.
Yes.
That sounds very snotty, doesn't it? But it's true. In that market, it was the right way to.
But also, I would think that some of the participants would be jealous of it and not want to share or want to spin it. Because it's so sensitive to politics here, isn't it? Any questions from the audience?
I'm Gordon from the Building Societies Association for our Yes, it's a question really about how you manage the Secretariat Association is looking after the interests of its members, because it's easy to respond to what they say they want, which tends to be responding to the regulatory pressures that are happening at the moment, whereas as Paul and John mentioned, their interests might be served by building up political capital over the longer term. How do you get that kind of legitimacy really and support for that within your membership?
There was a great line from Mark earlier when I used to work for him at ABI, and I stayed in touch with him. He's the godfather of the trade association movement, Sir Mark earlier, and he said once, "We are not here to represent the views of our members. That would make us a laughing stock. We are here to represent the interests of our members." And that's where I think that's part of the translation service. Part of the role of a trade body is to set out what your strategy is and why you're behaving in the way you are behaving. Because actually most members will then come along with you. And if you're doing a balance between the longer term and the shorter term, the key relationship is between the chairman and the chief executive. They have to work well on getting that balance together and convincing the membership that they've got it right.
Yeah, I'll just add to that. I mean, first of all, that I represent the interest might have become a mantra for all trade associations now. We all say that. And actually, if you get new members, one of the points you make to them is that we're here to represent your interests. We don't say we're here to represent you. So really, it's engraved now into the kind of foundations of the modern trade association. The two-way negotiation issue that the way Paul kind of refers to is very common. I mean, one of the things I've found is that part of representing my members' interests is to actually explain to my members what their interests actually are, because they don't know about it. What they see, particularly if you're talking, for example, about the way rule changes work, and then you've got a whole issue with compliance and what tomorrow's note to the front line is going to have to be. You've got to explain to them why it is that actually their interests may be served by going way back upstream, looking at things at an earlier stage, and why it's actually in their interests to fund this. Now, I had a lot of this when I started off because, as I say, I started off the European work of the organisation. And trying to convince them something that's happening 5 years before it would affect them was important to them. It was really quite an interesting task. But you can do it, and you have to interact, you have to actually be very clear about the reasons why this is important, and make clear the way you're going to work it. And so I also have a structure in the organisation for making it happen. We set this up. But it's a two-way negotiation. Actually, part of the fun of the job is the two-way aspect of the negotiation. You're negotiating with your members as much as you are with people who are at the other side of it, which is the regulator or the parliament.
Well, let me just say that you've got a tough road to hoe there with building societies, because of course they used to be, over half of mortgage underwriting in the UK.
80%.
Yeah, 80%?
Yeah.
Really? As much as that? Goodness. And now they're what, 10%, 20%?
20%.
Yeah.
23%.
Yeah. So they've lost an enormous amount of market share.
They're growing now. It was 18%, so
Okay.
23%.
Well, that is encouraging actually, because I do think that they sort of lost they lost a sense of their role in the economy for a little while. And I remember actually going to Building Society Association, this is a while back, probably completely different people there, and suggesting a shared services model to standardize the way that mortgages could be underwritten and evaluated so that they would have access to much more efficient primary market financing in the wholesale debt markets, which seemed to me a perfectly sensible thing to do. And I was told, oh no, our members don't collaborate. End of conversation. And I came out of there going, well then what does the Building Societies Association do for its members if it doesn't have a vision about preserving their role in the economy? So I'm glad to hear that the business is going up and that they're fighting back. And I still think a shared services solution that makes wholesale finance a lot more efficient, that can put them on par with the big banks' access to wholesale capital markets, would be a huge boon to the UK.
Yeah, I think they do collaborate now more than it's something they do.
Maybe I should come back and talk to them again.
But I guess that's another question for where is the balance, the role of the trade association in terms of helping members to collaborate and presenting opportunities that third parties might be presenting for collaborations like that? And when is it up to the individual institutions to take that step themselves?
I remember that one aspect of that conversation was that we only do what our members tell us to do. And that they don't want a shared services utility. Or they've never asked for it, so we're not interested in it. So, I mean, it is, if trade associations are moving towards a model where they try to anticipate needs, that's great, because I think the world is becoming obviously a much smaller place in which to do business, and global finance shifts around much more quickly than it used to.
Can I make a couple of comments on that?
Yeah, absolutely.
Do you want to? Okay. Shared services models are always difficult because everybody wants the basis of the sharing to be on the basis of their current model. And by the time you've worked out what model you want, the market's moved on. So trade bodies sometimes just are too slow for that sort of collaboration. However, what you need is an external catalyst. The faster payment service, which I introduced when I was running APACS, was catalysed by an Office of Fair Trading inquiry which said you have to provide same-day clearing for bank transfers on the internet. And that was an external force that caused the banks to say, we've got to do something. Actually, what we did was we came up with near real-time payment and settlement through faster payments, which was streets better than what we've been asked to do by the Office of Fair Trading Task Force.
Didn't Mervyn King sort of, from on high as governor of the Bank of England, also say thou shalt have faster payments?
He didn't. The difference is not with the. It was the Office of Fair Trading in the lead, but it's the near real time as opposed to same day, which I'm trying to make the point, because I do think that was where the industry added value by coming together and responding in the correct fashion to the catalyst of government intervention, which of course the then governor was very involved in. Where it comes, the worst bit you can do is trying to get sort of standardisation from lots of very different models, because you always tend to focus on the wrong bit. And you get people saying, but my chief executive thinks that question's really important. And you haven't got an answer to that apart from, you must be daft then, or she must be daft.
Yeah. Ian?
I'm a little intrigued by one topic that hasn't come up at all yet, which is questions of the public's perception of the firms within your trade bodies. And I'm thinking about ethics, and I'm thinking about trust and trustworthiness of practitioners. I can imagine you saying that you see the professional bodies as having more of a role in that than the trade associations. But I can also imagine you saying that there must be a role for the trade associations in those areas as well. You talked about regulation and a lot and legislative change, but that the side of it that is the way that consumers and the general public perceive your sectors or subsectors is a matter of great interest to me, and it's interesting that you didn't mention it, and I would like to understand how both of you think it fits in with your trade association model.
Well, it's a very good question, and if it didn't come across, I'm sorry, I did actually try to indicate that the trust element had really gone from financial services. What I meant by that in my sector is very much that the general public has no confidence in the firms that they have to deal with. And that is across the board. I'm not in the banking sector, but I think that has the same sort of problem with the public as the investment firms that I represent. So, first of all, thank you for the question. It's a very sensible question. It's a very good one to have. The public perceptions are absolutely vital, because without the public perception being one that actually makes people feel that they want to do business with these firms, you're always going to have trouble with the client base. The client base of our sector often depends on people getting bits of, or quite large chunks of money later in life. We have a very skewed client age range, which tends to be towards the older end, because that's when they inherit the house their parents bought. And they've suddenly got £500,000 worth of a family of two, that is 250, whatever it is. But there's quite a lot of money that comes their way. And these may be people who have been, I don't know, in very decent, but very, medium pay kind of jobs, so teaching, for example. You're not going to get a lot of money in teaching. You'll have a very decent life, and you will be, well, but you will not land up with £500,000, and suddenly you've got this. So that skewing tends to be, well, what are we going to do with this money sort of thing? And there's a whole issue about how can we get confidence in an industry that we're not in contact with. And I think that is a really serious issue. We've got to have some trust there. And I think that building up trust is actually a mainstream issue for us in the way we talk to government, because we are wanting very much to get a wider public investment going in their own interests, because of the way in which if you can manage your finances well and make some sort of savings which actually work for you, rather than just sitting in bank accounts, but actually work in the investment sense, either through mutual funds, whatever it's going to be, then it's actually very helpful to you as well as to the society as a whole. So there's quite a big case for this, and trust is absolutely vital to that. And I think the World Trade Association is absolutely paramount. In fact, what we have done, we have developed, since the merger, we developed a kind of strategic program which was really governed by the way members felt. And we put this out into a kind of manifesto sort of statement about what we're going to achieve, and it's all multicoloured booklets, things like that. You can get it from on our website, but also it's actually in hard copy in our offices. We divided into 6 columns of the areas we're going to be working in to reflect members' interests. And the thing that covers them all, which is what they think is the top priority for us as an association, is promotion and branding. They want us to do promotion and branding of the sector to help people understand that it's a force for good, that actually nearly all the firms are very concerned about their clients. They will try to do their very best for them, and to explain to people that they should interact with the firms because it's in their interest to do so, and here's how we can help you. So the role of the Trade Association has been very clear in this area, and we are now doing more and more of this kind of work, and certainly for me personally, it's something that actually is a very major element, because the way that we've restructured corporately since we merged, the kind of work that I do tends to be in this area. So the issue of things like ethics, trustworthiness, our role in relation to other people's roles such as professional bodies, absolutely paramount, and you're absolutely right to raise it. It's a very, very big area, and one we're going to concentrate on in the future.
I think it's a very interesting area. I have always worked on the basis that when people come and say to me, we've got a presentation problem, generally what they mean is, we've got a substantive problem, but we're trying to pretend that it's presentational. And I think that what a trade body can do is honestly reflect to its members how they are perceived, and what they can do, not just the trade body, what they can do to address that perception if it is a poor one. And that isn't a very popular message. I used to run the trade body for independent financial advisors, many of whom thought they could do their job a lot better than I could, and my job a lot better than I could, and all of whom believed that the press had been built up specially against them. And do you remember the Coronation Street, an IFA, the financial advisor actually was drove his car into the canal or something, trying to kill someone. They wanted me to try and get a nice IFA on Coronation Street. Anyway, I didn't. So I think the reputational issue, people believe that reputation can be quite easily changed or switched, where actually what you need to do is get them to address some of the root causes for why they're perceived as they are. And that is something which I think a good trade body will do. It is very difficult work, and your members generally will not think you're doing it well enough.
You've got such a new industry with peer-to-peer. Does that make a difference?
I hope so, because I'm working very hard on... My problem with peer-to-peer is that it is a term that is not particularly well defined, and there are a lot of people within who call themselves peer-to-peer lenders who other peer-to-peer lenders do not recognise as part of their band. And that is a definitional problem which I'm still struggling with.
Can we just turn that around off by that? Kathy mentioned it's a very new industry. Of course, mine is actually a very old industry, where you've got people who have been for generations with providers of services of the investment kind. It's when those people lose trust in the firm you've got, then you've got a real problem, because winning them back is absolutely hellish. Really a problem. You really can't afford to lose trust with those people.
Yeah, I think Paul made a point there about...
Can you say who you are?
Sorry, Hugo Innes, I'm guessing in finance. You made a point about translation of... providing a translation service for regulatory bodies. And I'm particularly struck with what's happening in the particularly Financial Action Task Force and a lot of their directives, which then have to become national directives and then passed down. And therefore, what is the level of interaction you would have with a body like the Financial Action Task Force and the strictures that they implement?
I'll let you take this, because I don't know.
So can we just have again the last bit there, financial action?
Well, I mean, a lot of the, particularly on anti-money laundering, AML, compliance, financial crime, and that's a massive drive that's taken place in the financial industry and everything else that we do now. And that then becomes issue of compliance, and how do you, I don't say push back, but how do you interact with bodies like that and then make it easier for your public to understand?
Well, the first thing we do is all the associations, we've got financial crime specialists and also committees that are committed to actually working in the financial crime area. We run a cybercrime working group with IT type specialists in it. We have a financial crime committee which is very much focused on anti-money laundering. The chairman of that committee happens to be the chairman of the Joint Money Laundering Steering Group, and I spent years and years on editorial panel of that body myself. So I've now handed up somebody else in the organisation. But we have strong links to that. When the FATF inspection was going around, or actually the IMF one from last year, which was based on, of course, interpreted FATF rules, we were among the various trade associations the Treasury came to see, especially to work out the kind of areas that we were working in, sort of the way we were dealing with financial crime, how we were actually working with our members to try and counter it, and the ways in which the various regulations and money laundering directives and so on being implemented, the way in which the things like the sanctions area of, or the POCA, the Prisons and Crime Act, were applied and this kind of thing. And also what were the kind of big issues for our firms in our sector in connection with, for example, things like identity theft or or criminality against the firm itself by, for example, theft of websites, this kind of thing. So there was a tremendous amount of work that goes on in this area, and we run an annual financial crime conference. I think that what we need to explain here is that the interaction between us and the various agencies, the National Crime Agency, the City London Police, obviously the Treasury in terms of regulatory policy, and pushing the SCA in terms of enforcement and anti-financial crime capabilities, plus things like putting out anti-boiler relief, for instance, kind of thing. This is a big sector for us, and we run it very carefully, and in fact that whole sector is under supervision, our organisation, and it has got a very high priority in terms of the things we are supposed to do for our members, and we keep it a high priority too. So I think the point I want to make to you is that we are interacting very strongly with the various agencies that are of a regulatory or governmental kind that actually are anti-financial crime, and we exchange information with them and also with other associations of what's going on.
I think I'm going to stop it there. That's a very good question, good answer. And we can continue the discussion informally downstairs. I actually have the advantage of Paul. I've learned to make an excellent gin and tonic. They don't, unfortunately, have them here in the computers hall, but they will have other forms of liquidity, investment first, hot cannabis, and now we've turned into a networking club where we get to do some networking. So I'm going to, in traditional style, ask you to thank our speakers, Paul Smee, John Barrass. And I will thank James and Linda and Elizabeth, who've done a lot of work on the organizing, and the team that supported us this evening.